Welcome. We want to use this question to prepare a cash book, the ledger accounts, and the trial balance. The question is, use the details below to prepare a cash book, the ledger, and extract a trial balance of Weststone Ventures for the month of March. Now, the month of March, we see March 1st, started business with cash £6,000 and bank £4,000. The money is used to begin a business is called capital. So that is going to be recorded in the cash book. Now let us look at the questions. We notice that cash is mentioned and bank is also mentioned. That indicates that we are not going to prepare a 1-column cash book, but a 2-column cash book. So when bank is mentioned and cash is also involved, it means that it is a double-column cash book that is required of this question. So as we can see, a cash book usually contains the debit side, which is at the left hand side, and the credit side, which is at the right hand side. Let me add that here. Okay, so the right hand side is the credit side, and the left hand side, the left hand side is the debit side, and the right hand side is the credit side. The debit side is the receiving side. That is, receipt when money is coming into the business is recorded at the debit side, while when money goes out of the business is recorded at the credit side. So we have CR to indicate creditor, and we have DR to indicate debtor. That is debit side at the left hand side and credit side. Now at the debit side, we have at the headings date, particulars, folio, cash, bank. We also have the same mention at the credit side: date, particulars, folio, cash, and bank. As mentioned, the debit side is the receiving side and the credit side is the giving side. So when payments are made, they are recorded at the credit side, but when receipts is involved, we have to record or enter our transaction in the debit side. So let's begin by looking at the question. March 1st, started business with cash £6,000 and bank £4,000. This represents the capital used in starting the business, so it's an investment into the business. So at the debit side, we see March 1, capital, 6,000 in cash column and 4,000 in bank column. The bank column indicates that 4,000 is in the bank account of the business and 6,000 is cash in hand in the office. Another date we want to take note of is the second date, March 3rd, paid for office furniture by check. So this is payments, which means money goes out of the business, and that is going to be recorded on the credit side. You see March 3rd, furniture, £1,400, because it is paid with check, is written in the credits in the bank column of the credit side. shown there. Now we go to the next question. March 5, bought goods with cash 4,700. Bought goods with cash 4,700. This is payments, money going out of the business, and of course it's going to the credit side, which is March 5th, purchases 4,700 recorded in the cash column because it was bought with cash. Then we have the next date, March 10, cash sales to date £6,500. So that is entered in the debit side because when sales are made, money is received whether in cash or by check. So as we can see, we have March 10, March 15, and March 25. That indicates that we have made sales on these dates, whether in cash or by electronic transfer or by check. So as we can see, sales on the 10th of March, 6,500, on the 15th, 5,600 in bank column, and on the 25th, 4,200 in the cash column, which indicates that in some cases, physical cash were given, and in other cases, it was paid into the bank or check was involved. Now we go to the credit side. March 20th. Okay, before March 20th, we have March 12. March 12, bought goods on credit from LYG 7,000. When goods are bought on credit, they are not entered into the cash book. That is why we don't see any entry indicating March 12 goods were bought. No. So where then do we enter this transaction? When goods are bought or sold on credit, it enters into the journal. In this case, we have purchases journal because goods were bought from LYG on March 12, as shown here. March 12, goods were bought from LYG company to the tune of £7,000. So it's recorded in the purchases journal. Now let's go back to the question. We have March 20th, paid LYG by electronic transfer 5,200. Now payment is made to settle LYG company. 5,200 was paid as shown in the credit side, March 20th. 5,200 by check, and that is written in the bank column. And something notable happened on the 28th. On the 28th, we have paid cash into bank £2,000. In this case, the money is not spent, it's not going out of the business, it's only being paid into the bank account of the business. Now it is indicated in the cash book. Look at the debit side, shows March 28th, bank received £2,000. Now in the folio column, the letter C is written there to indicate that this money actually was not spent but into the bank account of the business. So the C represents what is called contra entry. That means that this amount is going to be recorded on both sides of the account. As it is, we have seen the debit side, it is also written at the credit side. Look at it, March 28th. Cash was paid into the bank. and we see the bank column, £2,000 is written there, and the letter C indicates that it is a contra entry, which means that this transaction or this record would not be found in any other book of account because the double entry system has been completed. It is recorded both at the debit side and at the credit side of the same account. Then finally we have March 30th, paid rent by check £500. Paid rent indicates that money is expended, is going out of the business. So we are going to put that, we enter that in the credit side, which is the right hand side, and that is shown on March 30th. Rent was paid by check £500. So what we do now is to add the figures. At the debit side we have 6,000, 6,005, 4,200 and 2,000 in the cash column, which gives us a total of 18,700. Then in the bank column we have 4,000, we also have 5,600, which gives us a total of 9,600. Now let's check the credit side. At the credit side of the business, of the account, we notice that we have only one entry, that is purchases of 4,700 in the cash column. That means that there is going to be a balance. The debit side is showing 18,700 and the credit side has only 4,700, which means there is a difference of £14,000, and that is shown on March 31st as balance carried down. So 18,700 less 4,700, the difference is £14,000, and that is written in March 31st, balance carried down 14,000. So when 4,700 is now added to 14,000, it also gives us a total of 18,700. Now the same thing applies to the bank column. The bank column at the debit side indicates £9,600. Now the bank column at the credit side, we have 1,400, we have 5,200, we have 2,000, and we have 500. When this is added, we have 9,100. Remember, the debit side indicates 9,600 and the credit side has 9,100, which indicates a difference of 500, and that will be balance for the bank column. So March 31st balance carried down is 500 for the bank column. Therefore, add the 500 to all the entries in the bank column to now give you the same total with the debit side, which is 9,600. Now what we do, since the month has ended March 31st, the next month will be April. So the 14,000 we have here is now transferred to the debit side of the account. April 1, balance brought forward. At the cash column, we have a balance of £14,000, and at the bank column, we have a balance of £500. Okay, so let us now move ahead. Remember, the question asks that we prepare the ledger, and as well as the trial balance. Now let's go to the ledger. The ledger, this is the ledger account that happens to be the B part of the question. The ledger helps to show the individual entries found in the cash book. We have capital account, sales account. At the credit side, we have furniture, we have purchases, we have LYG, we have rent, and they are going to be shown in the ledger. So now the ledger helps to complete the double entry principle, which states that every debit entry in the cash book must have a corresponding credit entry in the ledger. Now if you notice, capital is written at the debit side of the cash book, but in the ledger, when capital account is opened, the capital account is open, you find out that the entries are found at the credit side. So March 1st, cash £6,000 was used to begin the business in the office, and the same March 1st, money available in the bank account was £4,000, which gives us a total of £10,000 in the capital account. So the capital account has a balance of £10,000, which was used to start the business. The next item from the cash book is the sales. Now we have 3 entries or transactions involving sales. So the 3 entries are shown in the sales account. Now let's go to the ledger. The ledger will have the sales account here. Now the sales account in the cash book is at the debit side. Now all these entries at the debit side will go to the credit side in the ledger account. So in the ledger account, we have March 10 cash 6,500. Sales was also made by check, which is bank 5,600, and March 25 sales was made and cash was received 4,200. So total sales for that month was £16,300. Now we go to the cash book again, and all the items or entries found at the credit side will be written in the debit side of the ledger. So let's go to furniture account. Furniture account, debit side, bank 1,400. The description bank shows that the payment was made in check. So we have 1,400 at the debit side. Then we have purchases account, that is the next item in the ledger. Purchases account, in the cash book it was at the credit side, and now in the ledger account it's at the debit side. So purchases, March 5 we have cash £4,700. And remember that on March 12, LYG sold goods to Whetstone Ventures, goods worth 7,000. Or in other words, this company, this business, bought goods from LYG, goods worth 7,000. So on March 5th, physical cash was made to purchase goods, while on March 12, goods were bought on credit. So total purchases for the month amount to 11,700. Remember that in the journal, purchases journal, we have the 7,000. It is that same 7,000 that is shown here in the purchases account, LYG, goods we bought from LYG 7,000, and so we have 4,700 plus 7,000 give us 11,700, which is the total purchases for that month. The next online is LYG account. LYG, goods were purchased from this company, goods worth 7,000 as shown in this LYG account. March 12, purchases 7,000. Now on March 20th, remember that this business paid LYG 5,200 as shown in the credit side of the cash book. March 20, LYG was paid 5,200 using the check. Now we are to enter this in the debit side of LYG account to indicate that out of this 7,000 pounds, only 5,200 was paid. Therefore, there is a balance of 1,800. So, Westone Venture still owe LYG 1,800, making LYG a creditor, and that is why we have it as a heading, LYG creditor account, because LYG is still being owed 1,800, which is now the balance available at the end of the month. 1,800 is still being owed to LYG account. Then finally we have rent account, which is posted at the debit side of the ledger, £500. Having completed the ledger accounts, all the entries found in the ledger account are now transferred to the trial balance, which will become the C part of our question. So, trial balance. The trial balance is a list of all balances extracted from the ledger to test the arithmetical accuracy of the ledger entries. So all the balances we have from the ledger, capital was £10,000, as we can see here, £10,000. Sales was £16,300, both at the credit side of the ledger account. Furniture, at the debit side, we have £1,400. These figures are now entered. All these balances are now entered in the trial balance. So we have capital 10,000 at the credit side. Remember, at the cash book, it was recorded at the debit side. Now in the trial balance, it's recorded at the credit side, just as it is taken from the ledger account. The ledger account showed a credit balance of £10,000 for capital. For sales, we have 16,300. For furniture, at the debit side, we have 1,400. For purchases, we have total of 11,700. LYG is a creditor still being owed 1,800. The rent account is 500, and then cash and bank. This cash and bank are the balances that we had at the end of the preparation of the cash book. Let's go back to the cash book. go back to the cash book. The cash book shows a balance of 14,000 in the cash column and 500 in the bank column. So we have cash and bank in the trial balance. So cash of 14,000 at the debit side. We also have bank balance of 500 at the debit side. So now the total at the debit side gives us 28,100 pounds, and the total at the credit side also gives us the same figure, 28,100 pounds, which shows that our postings or entries were correct. And that is what the trial balance is meant for, to test the accuracy of the ledger entries. So we have been able to prepare a cash book, a 2-column cash book. We have also prepared ledger accounts as shown, and then finally we have the trial balance. That's the trial balance. The total of the trial balance 28,100 on both sides, and we show that the account is okay. Now note the contra entry. This is represented by the letter C in the folio column of the cash book. It is used to indicate that surplus cash in the office was paid into the bank, or cash was withdrawn from bank for office use. Thus, entries are made on both sides of the account. Explanation for the ledger. The ledger is the principal book of accounts which records all transactions after the books of original entries, such as the cash book. It helps to effect the double entry system, and the double entry system states that for every debit entry in the book of original entry, there must be a corresponding credit entry in the ledger. So the ledger helps to complete the double entry principle as shown in the workings. Then the trial balance is a list of balances extracted from the ledger to test the arithmetical accuracy of ledger postings. And that is what we have done here. So at the end of our discussion for today. Next time we are going to prepare what is called the final account. We can use the trial balance to prepare the final account. Final account includes trading and profit and loss account, which is also called income statement. And then we also have what is called the balance sheet. So with the trial balance, we can prepare a trading account, or what is called profit and loss account, which is also now known as income statement. And after that, balance sheet can also be prepared with the use of the information found in the trial balance. So look at the question again, and then look at the postings. The question and the postings at the debit and the credit side. You can drop any question you have in the comment section. Remember to like and subscribe so that you can get more updates on this channel. Bye for now.